Hi everybody, welcome to another update on a stock screener. Today we're going to look through the Wall Street Courier cheat box whenever I don't know what to do. Is gold going higher or lower? Are stocks going higher or lower? Then we are just going to look through our cheat box. And the first thing that we look at is the market regime. So looks like we are going into increasing risk, but in the long term, it's still pretty bullish. But in the short term, you can see that there is some red coming in. Medium term, almost red. So I would be a bit cautious on the market right now. And here you can see that many of the sectors are already in the red, going to very high risk. Gold miners are still in the green. Hang Seng is also pretty okay. So that's tactical. Strategic regime still positive. Gold miners still on top. So I think gold miners are still a good buy. Nasdaq is definitely not doing well. So this is something to avoid. Nasdaq is going into very high risk. Here you can also see some things to buy. Hang Seng, gold miners. Yeah, gold miners definitely look very good. Financials also. Energy. Yeah, energy is not that good, but still at the top. So definitely gold miners. Here as well, on top. Smart money is still very bullish. So that could mean that this is just a temporary dip, and in the long run, we will still go higher. So smart money knows where we will go to, and this is also positive. So we could have a small correction, but it's not going to be a crash yet. And that's what we see from the big picture. Then we look at the COT reports. Let's go to currencies. Australian dollar going down. British pound is going down. Yeah, very bearish what we see here. Canadian dollar also bearish. Looks like all the currencies are bearish. Euro is bearish. Japanese yen is bearish. Only the Mexican peso is still bullish. Swiss franc bearish. And the US dollar is also bearish. So just avoid all the currencies. Probably the US dollar is the best of them all. But yeah, looks like it's better to be in gold than in currencies right now. On to energy. Crude oil. Yeah, it was bullish, but it's now turning bearish again. So I think oil is still a bit expensive compared to nat gas and coal. So I would avoid it. Nat gas is definitely bearish. It's going down below 50. This is going lower, or at least it's not going up. Heating oil, very bearish, but has a small tick up. But I think it's going lower. So energy, not looking great. What can we see from the agriculture sector? Corn is starting to move up, but it's still bearish, so not yet. Oats bearish. Soybean meal is not loading. Okay, so it's starting to become bullish, but still bearish. Soybean oil bearish. Soybeans bearish. It's not looking good, agriculture. Wheat has some spike up. I think there was some news on wheat about Russia crops not being that great. So yeah, this could actually go up wheat. However, here it's also bearish and bearish. So I would not get into the agriculture sector yet. On to metals. Copper. Copper has been doing really well. It's at an all-time high now. I mean, near-term high, 4.6. And our cheat box has completely predicted this. Strong buy for copper, and it is still a strong buy. So this could move much higher. I do have some copper stocks, Magna Mining. So if copper goes up, it will keep on rising. Gold is bullish, but the long term is still neutral. So yeah, it could have some corrections, but the trend is up for gold. Palladium has improved, but it's still below 50. I wouldn't touch it. Platinum up and then down, not touching it. Silver is very bullish, so the long term is also going up. So I think silver is going much higher. So I would focus on gold and silver right now, and copper, which I do have. Then we have rates. So here we can see that this moved up a bit. So the 2-year is probably going to go down. So this is inverted, right? So the 2-year yield could start to move down, which means the Fed would cut rates. Take that into account. Rate cuts could be coming. 5-year note is also starting to become bullish here. So that means bonds would probably go up in value. So I'm not that bearish anymore on bonds looking at this. But yeah, long term, it's still below 50. But there could be a change. And here, 10-year notes also going bullish. So bonds are not that bearish anymore. Here as well, going in the other direction. So we could see lower yields. Fed funds. Fed funds is going this way, so that means rate cuts are coming. We could see rate cuts coming very soon because the smart money tells us this. Maybe unemployment spikes up and then the Fed will need to cut rates. Long-term bonds are also starting to become bullish. We could see a short squeeze in bonds. Would I buy bonds? Why should I do that? I can buy gold. So gold is much better. We can also look a bit at the gold miner indicators. All very bullish. And let's see these loads. So the midterm market health is really good. So we know what we need to buy right now. That's gold miners. And waiting for it to load. Okay, short term still bullish. You can see here all the indicators are actually pretty good. They're all blue. Those are technical indicators. Trend is good. Short term trend good. MACD going crossover again. Looking good here. WallStreetCourier trend index positive. Mid trend positive. Long trend going positive. So very good. A lot of stocks above moving average. Very good. A lot of new highs. I mean, it can't get any better than this. That's why I'm 100% in gold miners and just bought another chunk of a gold miner today. So this is a very good. Weekly new highs. McClellan indicator bullish. RSI starting to get in a bottom again. Put call ratio, that's not too visible. Z-score, not interesting. Yeah, there's no capitulation yet. Not sure what this means. Looks. I have no idea what this means. It's not even correlated. Okay, smart money. Smart money was buying, but lately they are selling. So that's not a good sign. At least it's going back up here. Yeah, this is not too good of a sign. Smart money is not buying. Seasonal pattern is a bit too high. Could see it go down a bit. At least there are no Hindenburg omens. Okay, so I think the coast is clear on gold miners currently. It's all green, so that would be the place to be in, and in copper miners as well. This is extremely bullish. Copper is extremely bullish. Smart money is really long here. Stocks are in a short-term correction, but in the long term will probably go higher. Yeah, short-term correction. So I would stay in gold, avoid currencies, stay in copper. I think yields will come down. There will be rate cuts. Bad for the dollar, of course, if they cut rates. And yeah, we stay just in these three things here: gold, silver, copper. Oil, not bullish, as you can see here, it's going red. So I would avoid that. And agriculture is not good yet. So that was the update, and I'll see you in the next video. Bye.